Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, come on, everybody. You know us by now. We are the Dividend Diplomats. Today, we're going to talk to you about a tech stock named Texas Instruments, ticker symbol TXN. We're going to review their earnings. We're going to run them through the Dividend Diplomats Dividend Stock Screener in this video right now.
Guys, so smash that subscribe button. Give Bert and I a nice thumbs up. We're diving deep into this beautiful dividend growth stock, adding passive income, looking at the dividend stats to see if this is a great dividend stock to buy right now during this volatile time period as the stock market keeps plunging down. A lot of red. When the market's red, Bert, all I see is green, baby.
Yeah, it's when we run off the sidelines onto the field. And we want to help see our income grow, take advantage of all of these undervalued dividend growth stocks that we are trying to buy today.
And Texas Instruments can be one of the highest quality stocks, brother. It's like walking into the ring and you got Stone Cold, The Rock, Triple H, Hulkster. It's just a high quality dividend stock. They just don't make them like they used to here.
Yeah, that's what we're hopefully going to see as we talk through their earnings, especially in a time when the semiconductor industry is going through a little bit of turbulence right now. So we're going to see how the numbers are looking pretty strong for Texas Instruments. And then we're going to see how their dividend metrics are stacking up. So it's going to be a very exciting time.
Who knew a lot of money is built into those calculators?
I think a lot of people know that. I don't think that's exactly a secret going around Wall Street, that there are some pretty high margins on those.
And for all those resellers out there, get your hands on them. You could put those pretty darn quick on eBay and Mercari.
Yeah, so how did Texas Instruments pop up on our radar? Well, first, they've been talked about a lot in the dividend growth community throughout 2022. So this isn't like Lanny and I just stumbled on some hidden gem that nobody knew about. This has been a highly coveted, highly discussed stock. But recently, in our expected dividend increase series, where we look ahead to the next month to see what companies are going to be increasing their dividend, Texas Instruments was one of those featured companies. They're getting ready to announce that dividend increase for 2022 in September. So you know what? That's why we're like, let's not just look at them from a dividend increase perspective. Let's look at them from an entire company's perspective. And that's why we're here today.
All right, it's time to get Cactus Jack, Dude Love, and Mankind on this right here, guys. So Texas Instruments, the ticker symbol is TXN. And the close of business on August 30th. Yes, we're recording this before the month is over. The price was $166.74. And Bert, I mean, this company is huge. You know, revenue in Q2 alone, let me read this right, over $5 billion in revenue in the second quarter.
Yeah, no, that's right. And what's crazy, it grew 14% from previous Q2 of 2020.
Top line.
Yeah, let's look at the bottom line though, because the top line was massive, but the bottom line is too. Their net income was $2.2 billion. Well, an increase of 19% from the previous year.
So top line goes up 14%, bottom line goes up 19%. That's called increasing revenue, but managing expenses even better. EPS was therefore up 20% quarter over quarter. You have to love that. And Bert, cash flow from operations is $1.8 billion in Q2 alone as well. That's phenomenal.
Yeah, in the trailing 12 months, they have earned $8.7 billion from operations, up 15% from the previous trailing 12-month period.
Guys, is the dividend covered by that cash flow of $1.8 billion? You better believe it. The dividend cash out to pay the second quarter dividend was $1 billion. Free cash flow is actually $1.17 billion. So even just the free cash flow covers the dividend. You gotta love that.
Yeah. So I mean, just to think about that, revenue crushed it, net income crushed it. They are a cash cow. They are printing money along those semiconductors. Yeah, so for every semiconductor they print, they just have the stack of dollar bills that just slam down on the line right above it, because that's essentially what Texas Instruments is doing. And I think one of the other cool caveats here is They're investing a lot in future development too. Management said in their last earnings release in the last 12 months, they've invested over $3.2 billion in research and development for future products.
Not bad, Bert, not bad. But you know what? These investors want to get into the metrics, brother. They want to get into the 3 Dividend Diplomat stock screening metrics. It's time. You want to hit them with the sweet chin music here?
No, I'd prefer the rock bottom today. So that's the PE ratio less than the S&P 500 is that first metric. Dividend payout ratio less than 60% is that second metric, where although it's 60%, we like that perfect payout ratio range of 40 to 60%. Third, history of increasing that dividend, 5-year average dividend growth rate, along with how many years have you increased that dividend. And last, but definitely not least, that dividend yield is the bonus metric, which we look at after looking at the first 3.
Here's a little teaser spoiler alert. I would love it if Bert and his wife, after J&J, they just started buying a share of TXN after, after we get into these metrics. It seems like this one could be a great stock. All right,
We got 13 more weeks to go before we hit that. Well, no, it'd probably be 12 weeks after we get the drip from this upcoming September dividend from Johnson & Johnson.
Maybe you'll just go hammer and close the gap here. But all right, let's dive into that first metric, that price to earnings ratio. B, you want to hit
All
with
right.
the
Closing price 166.74. Estimated earnings per share $9.58. That gives you a PE ratio of 17.41.
Oh, it's true. It's damn true. 17.41. Not the cheapest, but definitely undervalued versus the stock market right now, guys. We featured a company like Diageo in one of our last videos. They're trading at a 22 times multiple. So this is a 17, definitely strong here. And Bert, I'll take over the dividend payout ratio here. They pay an annual dividend of $4.60. Obviously spread over 4 lovely quarters here. That dividend payout ratio is perfect. It's Bert's sweet spot. It's the meat of the bat. It's the sultan of SWAT. It's at 48%.
Yeah, and they're interesting that dividend growth is strong. We highlighted how revenue is growing, income is growing, free cash flow is growing, how it easily covers that dividend. You're going to see how crazy it is that they're also growing that dividend much. So they're covering a growing dividend by a large clip. Their 5-year average dividend growth rate is 18.13%. And they've increased that dividend for 18 plus years. They are well on their way to becoming a Dividend Aristocrat, which is a company that has increased its dividend for 25 plus years. I mean, Lanny, how many tech companies have earned that Dividend Aristocrat status? IBM barely counts. Barely.
Not many, Bert, not many. But guys, that dividend yield to cap this out, to get the little cherry on the top, is about 2 times almost the S&P 500, yielding at 2.76%. So definitely showing, strong dividend yield. You're definitely getting paid to own this stock that is rarely at these prices. And the reason why 2.7, 2.76% is important here is because their 5-year yield average is 2.41%.
And that yield that you've talked about here has been climbing this year due to the fact that the company's stock price has gone down year to date, down 12.52%, 52 weeks down 12.66%. So it's doing a little bit better than the S&P 500, but this isn't exactly a banner year here for Texas Instruments.
All right, guys. So there you have it. A very valuable company here with the price to earnings at 17, payout ratio 48%, dividend growth rate and years increasing is at 18%, 18 years with an above average dividend yield. Bert, give me your recap on what you're planning on here.
Yeah. So I think what's interesting is I think there's a point of distinction we need to highlight here first. Just because we're not looking for the cheapest stock. We're just looking for stocks that are undervalued compared to the market. So I always think that's important here. Just because it's 17.41 is the company's PE ratio, it's undervalued compared to the market. So for us, it's an undervalued dividend growth stock. It may not be Intel levels of cheap, but there's probably a reason why Texas Instruments right now is trading at a higher PE multiple compared to a company like Intel. So for me, it's still considered undervalued, despite the fact it's not the biggest value out there. That's at least what my gut reactions tell me. That said, the other metrics look phenomenal for Texas Instruments. Perfect PE ratio, very strong dividend growth, a very strong dividend growth history. And the financials look awesome too. Strong revenue growth, strong profit, strong net income, easily covers that dividend. They're continuing to invest in the business with future R&D. So a lot of great things are humming along here for Texas Instruments.
You do have that Occidental Oxy position still.
I do. I mean, there's been a nice run up here. I held on to a little bit left when Buffett started adding earlier in the year. See, why not? Now it's probably between $1,500 to $1,600, and maybe time to move that, sell that, take the gains from Occidental Petroleum, and start my investment in Texas Instruments.
You could always put some limit order sells on Oxy, do it in
Yeah.
tranches, 77.50, 80, 82.50, 85 or something like that.
Yep, move out of the oil commodity sector and into the tech sector here. I don't think that would be a bad move. I'd love to hear what people think about that in the comment section below. Overall, though, let us know what you all think about Texas Instruments. What are the metrics looking like? Would you buy Texas Instruments today at the company's current metrics, or do you have a different take entirely on the company? Let us know down there in that comment section below.
And guys, if you haven't already, subscribe to the channel, show your support, not only for the diplomats, but for the dividend investing community at large. We're all trying to pursue financial freedom here, or better your financial position, guys. So appreciate it. Give this video a thumbs up if you like the video. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.